Gentlemen, welcome to Woodburn Accountants and Advisors workshop series on distribution of goods and services in China. You've joined us for part 4 of this workshop series, which is on creating your Chinese e-commerce business model. Are you marketing to Chinese consumers? Do you need tips on how to market to the Chinese? Have you registered your brand name? Have you protected your products and services? Are you looking to set up an efficient distribution structure? Are you looking to buy and sell goods in China, but you're not sure how to do it? Woodburn Accountants and Advisors is offering this series of complimentary webinars exactly on this subject in order for you, by the end of today's session, to have enough information and tools to help you with creating a successful and efficient business model in China. Today, you've joined us for part 4 of this webinar series workshop on creating your Chinese e-commerce business model. The economic landscape has changed rapidly over the years with an increase in e-commerce activity, consumer complaints, speculations of unfair competition. It's only natural the Chinese government has taken notice. And in 2019, the Chinese government did impose new regulations on cross-border e-commerce, which we will be touching on in today's webinar session. So just to get started a little bit on today's webinar. So I usually create these webinar sessions for 3 types of people. And I would love to know what type of person you are and what your company is in relation to these webinar sessions. So the first are really generally the newbies in China. So those that are either looking for an opportunity, have found an opportunity, and they're looking to educate themselves in the Chinese market to make sure that they're creating the right business models, they're protecting their businesses, and they're creating the right strategies for their market entry and growth. The next category would be the startups in China. So these are companies or individuals that have started up their businesses. They're probably 1 or 2 or 3 years into working in China physically on the ground. And they've been so focused on their core business that they've kind of forgotten about other things like finances, administrative compliance, new regulations that popped out, HR compliance procedures, etc. And they kind of need to come in and see, you know, learn a little bit more, educate themselves a little bit more on making sure that the back end of the company is functioning and is in compliance. And then you also have the experienced China hands. So these are usually people that have been in China for 5, 10, 15, 20 years. And they come along on these webinars actually to basically learn and obtain fresh ideas, and understand a little bit more about new regulations that are popping up along the way. Again, please do let me know which category you're in. It always just lets me know, you know, at what stage you're at. How these webinars work, very simple. I educate. Sometimes I'll ask questions along the way. Ultimately, my goal is to provide you with enough information after these webinar sessions that you can leave and say, okay, I have now a guideline on how to create my e-commerce business model, or I have a guideline now on what further research I need to do that I can then create my strategy. We're going to be on this webinar for about 60, 70 minutes. Please be as interactive as possible. Ask me questions, add it into the question section of the control panel, chat with me, use this time to your advantage, that you really get something out of it. What are we covering? Well, basically, we're covering everything from cross-border e-commerce in China, which is usually the starting point that most people want to develop because it does not require them to have an entity in China, and how that all works and what strategies you can develop as an overseas retailer as well. How am I able to help you? Well, first of all, let me just say who I am. My name is Christina Kohler-Coluccia. I'm the head of business advisory at Woodburn Accountants and Advisors. I've been in the corporate services sector for 16 years now, solely working in the Chinese market. I've only been focusing on inbound investment into China. I've worked with over 500 companies in relation to their market expansion into China, their local domestic expansion, as well as their growth and expansion then to other Southeast Asian countries. Something that I will be touching on at the end of today's session is I'm also the creator of the China Roadmap program, which is basically a program that was developed primarily for the newbies that are trying to educate themselves, but it can also be utilized for those that are startups and old China hands. The program is supposed to be a guide to show you what you need to do, what milestones you need to achieve, and how to get to those milestones in order to be successful in the Chinese market. If you enjoy these webinars, subscribe to our weekly newsletter. We're going to have our first newsletter come out on Monday, and it always has different information about upcoming webinars, articles, publications, events, etc. You can also get those updates through either my LinkedIn page or our company LinkedIn page. And then if you want to listen to other webinars from the previous years, we have our whole archive on our YouTube channel, so you can listen to everything from basically 2018 onwards. So let's go ahead and start off with cross-border e-commerce in China. So I want to really start off with the basics right now in terms of the definition. All right, what is the definition of cross-border e-commerce in China? So just to give you a background, the current regime initially launched in 2014, and it permits overseas sellers to sell consumer goods directly to Chinese consumers through certain registered e-commerce platforms like Tmall.hk, JD.com, basically the e-commerce platforms that are hosted outside of China. Okay, and these are just two that I've mentioned, but there are many more available. The qualifying products can be imported into China on an expedited basis at reduced import tax rates as compared to goods that are imported through the traditional channels and methods. The products are either shipped from overseas direct and sent directly to the consumers, or they are stored in bonded warehouses in China. It's important to note that a core part of the cross-border model is that the platforms are connected with the Chinese customs. So this is important because the Chinese customs do need to register and track digitally the trade flow of the products that are actually coming in. So the Chinese customs will always ask on information about shipment, payment, and just generally the order. A question that pops up a lot is whether you need to register with the China Inspection Quarantine Bureau when shipping cross-border, and ultimately this depends as to whether you are utilizing the direct shipping model or whether you are using the bonded warehouse model. The bonded warehouse model requires you to do a CIQ clearance, a China Inspection Quarantine Bureau clearance. The personal parcel route don't require that. So the biggest question also that people kind of raise is, well, why did in 2019 these e-commerce regulations come out? I mean, we know China creates regulations on a daily basis, but this was really a big push through e-commerce. So looking back just some years ago, the e-commerce market was not as mature, obviously. I mean, this is something that just exploded in the market. And buyers often turned to what we would probably call gray sales channels, things like a platform called Daigou, often buying products that were smuggled into China. So, you know, this is something where because of this smuggling and because there was such an increase in smuggling of goods, the new regulations are really there to control the import of the products. And as I said, it's linked now to the customs so that they can digitally track all of the goods. So ultimately, the government is saying, you know, we don't want any more of these smuggled goods to come in. There are proper channels and routes you should take. Please take them so that proper taxes are imposed and no harm can come on either the supplier, the platform, or the consumer. Now, another big question that arises is always, can my product be shipped to China, right? I mean, that should probably be the first question that you ask. So in China, there is something that is called the positive list. And the positive list on cross-border e-commerce of imported Commodities at Retail, it's a very lengthy title, was first released in 2016. And in 2018, the list was updated once again, allowing 1,321 categories of product to be permitted to be imported, okay? So it is important for you to do your own research and your own check to make sure that your products can be shipped to China, and just to also know for your reference, are they on the positive list? Now, the benefits of being on the the benefits of being on the positive list is the fact that the product will enjoy preferential tax rates. So there will be a 30% reduction on VAT as long as the purchaser has a transactional value that does not exceed 5,000 RMB per transaction or 26,000 RMB for the year for that product. It's based on the purchaser's transactional values. You can import lists. So let me give you an example to that. There are a lot of Chinese women in China who are purchasing milk formula and other baby products from overseas. If you buy a certain milk formula, per transaction, you can only spend 5,000 RMB or an annual amount of 26,000 RMB for that product. So the purchaser is an individual. If then the husband does it, he also has that same limit, okay? Because it's based on the Chinese ID card that has to be then submitted when you're trying to clear customs. You can also import products either through the bonded zone model or the direct shipping model without applying for any import licenses or import certificates. So this is also a big advantage if you are on the positive list. Now, a big question that's popped along is that there's a lot of rumors going along in the market right now about having to do special registrations or obtain specific licenses for products that are in the cosmetics and baby formula, medical equipment, or special foods. But there is nothing that has come out on the market, and by the end of 2019, it seems that these special registrations will no longer be imposed. But again, no guarantees can be given because regulations can just pop up tomorrow. But as of this time, no special registrations have to occur for those type of products. Now, then obviously the follow-up question to all of this is, well, what if my product is not on the positive list? Well, don't worry, because your products can still be shipped directly from overseas to China via the direct shipping model, which is the postal and courier method. The only downside to it is that you don't get the benefits if you are on the positive list. So there will be higher tax rates for the consumers or the purchasers. There will be more complicated customs clearance procedures. Probably more documents will have to be submitted and provided. Doesn't mean you can't do it. It just means it's a little bit more complex and more expensive. Now, I thought it would just be interesting because I don't have updated details, but I think it's always very interesting to see what type of products are being imported through CBEC methods. And as you can see, the top three are food related. Most likely that's actually related more to baby products than anything else, baby food products more than anything else, baby formulas, etc. But then you have cosmetics and apparel and accessories that are basically the top three. So it is always interesting to see, what do the Chinese consumers look for in terms of products that they're willing to go through the method of cross-border e-commerce. Now let's go look at the types of shipping models, okay? And I'm going to start off with probably the most, the easiest, which is the direct shipping model. So I've taken these diagrams from Phone Business Intelligence because I thought they were great, great ways of showing you what the models are. So if you look at the direct mail model, which is on the left, this is basically the very simple traditional model that exists, where a customer makes an order online, it's sent over to the overseas retailer, there's packaging, there's international logistics, that's all done overseas. Then the parcel arrives in the warehouse at customs, then there's a customs clearance procedure, Then there's a domestic delivery and the customer receives the products. In all of that, there are certain payment flows that have to be abided by, but basically it's a very simple and direct method. What you obviously don't see here is that all the orders and everything was done on the e-commerce platform, okay? Now, what is very interesting is to know what these cross-border e-commerce platforms like JD.com, VIP.com, Tmall.hk, NetEase, Koala, Xiaohongshu, all of these platforms, what they're doing is that some of them are also investing in overseas warehouses. So what that basically means is that versus the overseas retailer doing the shipping abroad, they're actually shipping it to the warehouse of the cross-border e-commerce platform, who is then handling the shipment to China in a bulk shipment. So it's something that's just very different that's occurring. So you have both of these options available to you if you're looking to do the direct shipping model. Now, obviously, the advantage or the pro of the overseas warehouse model is that you are saving costs on the shipping ultimately, because there's a bulk shipping that's occurring through the e-commerce platform. So let's talk a little bit about what it means to do direct shipping. All right. So what it basically means is you are shipping your products directly from overseas, utilizing one of the courier companies like FedEx, DHL, et cetera, et cetera, et cetera. The clear distinction between this model and any other models is the fact because you're sending out single packages means that these packages may not be checked, they may not be taxed, depends which port it arrives at or which customs bureau it arrives at. And you know, you kind of have to be lucky or not so lucky if you have a random check and the package is then spotted. What happens is that the customer either has the delivery sent to their home or they have to pick it up at a local post office because then VAT and then sometimes the customs duty has to be paid. So that's how the collection is done. Some of the benefits of this model, as I mentioned, is that packages are randomly checked. Taxes only apply occasionally if you're lucky. You don't have stock in China that you have to kind of follow up on their inventory unless you do something with the overseas warehouse model. You definitely have tax exemption if the value of the product is less than 50 RMB, and you don't need to do a customs inspection quarantine clearance. So that's also another big advantage of this type of model. The disadvantage is timing. It's just as simple as that, as well as the cost for the shipping. So generally, when you're doing these types of things, it will take between 7 and 30 days for the individual to receive their package, and there will probably be higher costs in terms of customs and shipping. But you know, some Chinese buyers are very happy to deal with the direct shipping because then they're not obtaining any form of fake product, and they're getting the product that they've actually, you know, they're getting the specific brand that they've actually tried to obtain. Now, from my perspective, when you're looking at a strategy, the direct shipping model is definitely something you could start off with as a testing platform, but it is not probably a long-term solution for your e-commerce strategy and e-commerce business model. The tax implications for direct shipping, basically what you need to do is look at the category of the category of products that you're in, and then you know you're all going to get a copy of this presentation, so you can just look yourselves at where you might fall under, whether it's at a rate of 15%, whether it's at a rate of 25%, or whether it's a rate of 50%. Okay. So as I mentioned, the conclusion really for the direct shipping model is that, you know, it's a great starting point. It's a good option for you to test the market and see what kind of resonance occurs. Just remember, when you do go on e-commerce, or you start creating your e-commerce business model, it has to go hand in hand with creating a marketing strategy, okay? People are not going to find you on the platforms if they don't know you exist. all right? So you've got to do the two things hand in hand. Otherwise, it makes no sense whatsoever, and your test will not be successful. Just remember, if you're doing the marketing, people are starting to become aware of you. You've got to know what your trigger points are in order to then move to a more scalable option as a strategy. So even with e-commerce, create phases and then pinpoint trigger points that would be your trigger point to say, right now we're moving on to the next phase. This is the structure we have to develop, okay? The next type of shipping model is the bonded warehouse model, and this is something that's becoming increasingly more popular to ship products in bulk from overseas to bonded warehouses in China that are also run by the e-commerce platforms. The bonded warehouses are only in free trade zones, and basically what this means is that you can send product, the product arrives in the bonded warehouse, no customs duty has been paid as of yet, no VAT has been paid as of yet, it's just stored there, and what you can do is ship it back if no one is buying the product. And all you have then associated is the shipping prices. Now, the advantages of the bonded model are that compared to traditional imports, you can basically have a 30% discount on import rates, on customs duty rates. In addition to that, the advantage of the bonded model is that you're doing just-in-time delivery. So basically, if an order comes in, you'll know that the consumer receives it within 2 to 4 days instead of the 7 to 30 days with the direct shipping model. What I wanted to add here, as Feng Business Intelligence highlights, is something that is also happening with a lot of these cross-border e-commerce operators, which is that they are creating offline stores as well. So what this basically means is that they are allowing individuals or consumers to shop in their warehouses. So they're allowing people, so the first offline store was actually created by Kaola.com in Hangzhou, and they opened also a second one in Chengzhou, and there are more that are opening up around. And what this basically means is that consumers go over to the warehouse, they can look around, shop around, they need to provide their ID card, telephone number, they need to settle the payment, and then customs is cleared and they can take the product home. So it's just an interesting development going from e-commerce to something that is now traditional and offline in these warehouses. It's just another opportunity to sell products, and most likely they are doing it because they're realizing some people want to feel or touch the product, especially if it's maybe home products or things like that, and it's just another avenue for them to create sales. So what happens basically with the bonded warehouse model? The basic requirement here is that the warehouse has to be bonded and it has to be located in the free trade zone. You need to be able to store and clear goods without the necessity of registering or filing them. And this is obviously a clear advantage if you're located in the bonded zone. I think the biggest advantage is that if you feel like people aren't purchasing the product, or you feel there's an expiry date on the products can be actually sent back directly to the home jurisdiction without any duties or taxes being paid. Duties are only paid before customs clearance. So like I said, when you're looking at the offline example, you have the consumer come to the warehouse, they have to show their ID card, they have to pay the duties, they have to pay the price of the product, and then it's cleared. So it's the same, even if they would be at home and the products would be cleared, it's the same process. The tax rates for the bonded model are much lower to traditional imports because you can enjoy a 30% discount on the import rates, which is amazing. Now, if the biggest advantage probably of the bonded warehouse model is that it drastically lowers the lead time for the shipment of the product from 7 to 30 days all the way down to 2 to 4 days, which is incredible. The only thing that you can't forget is that when the products are brought in, into the warehouse, there has to be a customs inspection quarantine clearance. This is a must. So, like I said, the direct shipping model might be a great start for you. It might be the preferred choice initially. And then as your business grows, this can be phase 2 for you. I put the slide of taxes on here. I have a feeling this might seem very overwhelming for some of you when you're reading the formulas and things like that, because you have to look at consumption tax for certain products, especially cosmetics, perfumes, and things like that. You also have to look at value-added tax, and then you've also got to look at the customs duty rates. So I've put it here. You can look at them in more detail later on, and if you have any questions on that, please don't hesitate to ask. So the next question is, usually with a cross-border trade, how does it work with payments? Because that's probably something that is quite significant and important. So generally, in order to make the payments, you would use Alipay cross-border or WeChat payment cross-border. This would be utilized via the e-commerce platforms. The Chinese user will pay in renminbi. Alibaba and Tencent will handle the currency conversions with their partner bank, and then the platforms will basically pay the amount to the overseas account. And that's it. I mean, it's actually pretty straightforward. All of these details should actually be talked about and communicated with the cross-border e-commerce platforms to know exactly how everything works. I thought you might also be interested to know at how exactly the customs clearance procedures work, because that's also not always so straightforward. And obviously the customs clearance procedures are different whether it's a direct shipping model or bonded warehouse model, because with the bonded warehouse model, you have to go through commodity inspections, okay, which I've added here as well. So let's take the assumption that this is associated with the bonded warehouse model because it's more in depth. But basically, the importer will have to complete the following formalities. There's the customs registration, the commodity inspection, customs declaration, document submission, examination, payment of taxes, release of goods, and then the foreign exchange control. So that's kind of the whole flow in order to understand how everything works. Now, what the customs needs in order to be able to clear the products is they need to know from the vendor what is the name of the purchaser, what is the Chinese ID card number. And again, this all goes through the cross-border e-commerce platform. So it's going really in, I mean, this is really probably going in depth for you to understand how it all works. And don't forget, each cross-border e-commerce platform will have different processes and different stages. I mean, they might tweak things a little bit differently from one to the other. The biggest thing that I can highly recommend is that when you are doing the direct shipping model, definitely talk to the cross-border e-commerce platform about what would be the best provider to work with. Do they have a provider that they can suggest, like DHL, FedEx, TNT, God knows who else there is. Is there one that works better with China than another one? Is there one that understands e-commerce better than another one, etc.? Do they have a contact person that you can reach out to? That's kind of all the things you should be talking to them about. But use the logistics providers because they will do the majority of the work in relation to the customs clearance procedures, as well as putting things in the bonded warehouse, etc. Now, I do want to go through the benefits of the cross-border e-commerce regulations. So yesterday, I did talk a little bit about the e-commerce laws that are different from the cross-border e-commerce regulations. So there are different sets of regulations that came out depending on the business model you want to have. So today, we're looking at the cross-border e-commerce regulations that were also formulated and implemented as of Jan 1, 2019. So the first one is the pre-importation registration waiver. So this basically means that the new regulations from last year, they extend the waiver of the pre-importation registration requirements on specified categories of products like cosmetics, health food, medical device, infant milk formula, etc. In theory, these registrations were required, or these special registrations were required in order to track sensitive foreign products. And so now, as I mentioned earlier, under the positive list, this is indefinitely it's not required. There's also been a value limit relaxation. So what this basically means is now you have a per transaction quota of 5,000 RMB. Previously, it was 2,000 RMB, and you have an annual quota of 26,000 RMB versus 20,000 RMB. And these are the purchaser's limits per transaction and their annual quota limit, okay? Because as I mentioned, in order to clear anything, you have to provide the name of the purchaser together with and provide also a copy of their Chinese ID card. So, you know, things are good because it means more people can spend through the cross-border e-commerce platform. Now, what I just want to highlight here, because people assume that you only have a limit of up to 5,000, you have this limit in order to get the preferential treatments on tax reductions, etc. That does not mean you cannot continue to buy products. It's just that you won't benefit from any of the tax benefits that are associated with the importation. So, for example, if you buy product that is 6,000 RMB instead of 5,000 RMB, you're not going to get halted at customs. It just means that you'll have the limit of the 5,000, and on that 1,000, you have to pay more traditional taxes on it, which just makes it a little bit more expensive. There is the tariff exemption and tax reduction. So as I mentioned, there is the 30% discount for products that are imported through the cross-border e-commerce channels that are implemented. There's an expansion on the positive list, which I mentioned earlier. So, you know, as of 2018, there are 63 new tariff categories, which is amazing. It just means, you know, the whole market is opening it up, and I'm predicting that it will open up even further. There is also the free trade zone distribution center. So what this basically means, it allows foreign sellers or suppliers to stockpile their products in the designated free trade zones, from which, you know, customer orders can be fulfilled and delivery of products can be made to the end consumers. And then there's also the safe harbor against retaliatory tariffs, and this is really for suppliers that are based in the United States. So obviously, with the trade tension between the US and China, you know, tariffs have gone up, right? And it's prevented people from buying things from the US. But that's more from a B2B perspective. When you're looking at the cross-border e-commerce program, thus far, products are basically safe harbored because the retaliatory tariffs do not apply. So the tariffs apply for wholesale, but they do not apply for cross-border e-commerce. So that's an extremely important point for those of you that are US suppliers. So let's look a little bit at the strategy for overseas retailers. What should be your strategy? What should be your step-by-step process now to carefully understand how to create your e-commerce business model? And I suppose that this strategy can also be utilized for traditional trade flows. Like yesterday, we were talking more about B2B sales than we were about B2C. So, you know, this strategy is basically a guideline for anybody that's looking to create a strategy and what you should be doing. The first step is really understanding the supply chain structure. And for me, when I'm trying to explain people about the supply chain in China, I draw it out. So, you know, you have your supplier on the left-hand side, your customer on the right-hand side. The customer can either be a corporate entity or it can be an individual consumer. Create your whole supply chain and make sure you're looking at things like paper flow, right? What documents have to flow from each step along the supply chain? What's the cash flow looking? What's the invoicing looking like from each stage of the supply chain? What does the cash flow look like on each stage of the supply chain? What's the product flow on each stage of the supply chain? And obviously you want to then create a supply chain and operating model that is tax efficient, and that helps you to achieve the goal you want to achieve. The next step is doing the due diligence. So you are going to have to work with partners again in China to help you, okay? Whether that means working with a cross-border e-commerce platform, whether it means working with a third-party logistics provider, whether that means working with a payment provider like Alipay or WeChat Pay, you are going to have to work with third parties to create an efficient supply chain. So do your due diligence. Understand exactly how these partners operate, how they work, make sure that there are contractual terms and conditions associated with the relationship with each of them. So make sure you do your due diligence. In yesterday's webinar, I was highlighting how you can do a due diligence yourself from your desk. So, do that, utilize that to your advantage. The next is having in place contract terms. I can't emphasize this more. I really want to highlight to people that they should utilize, if you are an overseas retailer, please use lawyers or providers that are based in China who know Chinese law. In addition, don't have a fear that a contract is under Chinese law. You're working with third parties that are Chinese companies. If they are in breach of contract and you have evidentiary proof of that, you want to take them to court in China, because there's no way you can take them to court in your overseas jurisdiction. Who's going to show up? Nobody's going to show up. So if they are in breach, then you want to be able to take them to court, and you want to be able to take them to court in China. So I really want to emphasize to people, don't be scared of the Chinese law system. Have a lawyer in China review all your contracts, all your contract terms, all the conditions, making sure that there are exit strategies. There should be clear definitions within the contract terms about indemnity, responsibility, etc. And last but not least, you need to have an internal compliance program. You need to be able to monitor and control your third-party providers. You want to be able to control the supply chain. You want to be able to have operational guidelines that if you yourself have turnover of staff, the new people can see how you've done it and they know how to continue to do it correctly. So make sure you go through all of these 4 steps when creating your strategy, which is everything from the first step of creating your supply chain all the way down to due diligence, contracts, and then having an internal compliance program there to help you. All right. Now, I want to end today's presentation just highlighting a little bit about the China Roadmap Program and how all of this kind of relates to it as a guideline. The China Roadmap Program is something that we devised for companies that are looking to grasp at an opportunity in China, understand that opportunity, and then implement safe and compliant structures so that basically the business grows exponentially and you don't have to exit from the market. Every single company I have worked with has had a different China journey, both bad and good. Some have exited from the market, and definitely those that have exited, they did not follow this system. There was always something that they missed out of it. So just to guide you through the China Roadmap Program, especially if you're a newbie, is obviously the first milestone is having an opportunity, which is absolutely wonderful, knowing that you have an opportunity. So the only way you know you have a proper opportunity is if you educate yourself and you do your research. Okay, one is education, one is actually getting statistics, but also concrete information that you can utilize to say, wow, there is a great potential in this market. This is what we need to do. And once you have that info, you should, develop a strategy. I recommend developing a phased strategy. So phase 1, what would you do? Phase 2, what would you do? Phase 3, what would you do? What would be the trigger points to move from phase 1 to phase 2? And then create a budget surrounding that. The second milestone would be looking at implementation, which There's no proper order here because I think everything should be done simultaneously, but in regards to implementation, and it doesn't have to do about incorporating an entity, okay? It has to do about incorporating your strategy, which can mean you're doing things from home, it could mean you're using third parties, or it can mean you're doing it alone, all right? But the first is developing an ecosystem. So an ecosystem means developing a network of individuals that are going to help you, or that are first are probably going to educate you and then help you to implement your project. This ecosystem can be individuals you've hired that are Chinese and are going to be responsible for the China business. They can be partners like law firms, accounting firms, HR professionals, marketing professionals, public relations professionals, and the list can go on. Depends on the type of business you're in. It can be suppliers, customers, friends, chambers of commerce. I mean, you need to develop a huge ecosystem for the Chinese market. And if you think about it, you probably have this ecosystem for your home jurisdiction. So you need to replicate that for China. The second is protection, and it's not just protection for IP as I highlighted on the first workshop of this series. It's protection also for your trade transactions, your service transactions. It's doing your due diligences on partners. It's making sure you've been absolutely thorough about the people you're going to collaborate with, about your brand, and about the systems that you're going to implement. The third one is creating systems and processes and operational guidelines, creating your internal compliance program, basically. You need to have this on hand, that your staff know exactly what they're allowed, not allowed to do, that you have thought through contractual terms, that you've thought through trade transactions, tax efficiency, and that you have all of these systems in place that can guide you. Growth is then the next milestone, because once you have your implementation done, all you should be focusing on is growth. And what's very funny is yesterday I was talking to a client, an entrepreneur in China, who is in his third year, so he's a startup. He's in the startup category. And right now he's been growing and growing. Numbers have looked good, but he doesn't analyze the numbers. He analyzes them only at the end of the year. How can you make any decisions or focus on anything if you don't look at your numbers on a month-to-month basis? So in order to grow, look at your numbers on a month-to-month basis. Have the ability to read and analyze them. And then with that information, have the ability to focus on what you're going to do next with the company. In which direction are you going to go into? Those might be trigger points for you to go on to phase 2, phase 3, etc. But without looking at the numbers and analyzing them, you won't be able to focus on what's next. So this is sort of the China roadmap program that we've created that I hope everybody can understand and use as a guide to know what they have to do as kind of milestones for their China business and their China journey. How can I help you? Well, first of all, if you're looking to create an e-commerce business model, let me help you with understanding your background, understanding where you are today and what you're looking to achieve. So everything from advisory, education, we can help you to create that strategy. We can also help you then implement it. It does not mean you have to have something on the ground, but we can help you implement whatever stage or phase you want to implement. We will advise you on how to protect that and help you also create system processes, internal guidelines, operational guidelines, etc. Help you with contract formulation, and then help you with the ongoing controlling of that model, you know, making sure things are never going wary. So yeah, so I mean, if you're interested in my help or you would like to have a strategy session, now just so you know, you don't have to have all the questions and answers written down for a strategy session. The whole point of a strategy session is to brainstorm. It's for me to help you and give you suggestions as well to help you build up your strategy. So you can contact me at any point in time. I'm happy to have a 30-minute or a 1-hour call. In the chat section, I'm putting the link to the strategy session. You can very easily click on it and you just make an appointment directly in my diary, and I would be happy to talk to you. So don't hesitate at what stage you're at, because I've had a few people tell me that. You can just talk to me at any point in time. Now, I wanted to close off today let me just see. There's a question that came in from Jihong. Jihong, you were asking, is there a way or a link to find out if our product is on the positive list? Absolutely. If you go into Google, you type in China cross-border e-commerce positive list, and most likely there will be a link there, or you'll find other providers who will provide you with either a PDF document or something like that, which gives you the full list available. And then Jihong, you're also asking, is it better to avoid e-commerce to protect IP? No. I mean, if you see a great potential in the market for e-commerce, protect your IP first and then start doing e-commerce. One of the things that you definitely have to do as part of your research with e-commerce is you need to go and check, which mind you, if you're going to use an e-commerce outsourcing provider, which there are plenty that exist in China, then what many of these e-commerce providers do is they do a background check on you and your brand. So they'll do a background check to see whether anybody, or let me rephrase it, whether your brand is already being sold on any of the e-commerce platforms. If it is, then most likely it's a supplier, or it is somebody out there that's taken your brand and has scammed you, basically. Then you have to go through a legal decision what you're going to do next. But usually it's the same for if you work with marketing and branding agencies. They will generally, as a first step, do a background check on you and your brand to see whether from a social media perspective, your brand is being discussed. Who is discussing it? Is someone using it in the wrong way? So you can use those e-commerce people to do that background check on you, and they'll give you then an understanding of where you stand or what the status is on your IP. When I talk about IP, I'm talking about copywriting, patent registrations, and trademarks. If you haven't registered those yet, please do that today. Okay, well, not today because it's Chinese New Year. You start that from January 1st, next Friday, January 1st, start doing that. Because all of you that are online today, you are online because you're interested in the Chinese market. And as a consequence, if you haven't registered your IP, that's probably the first thing you need to investigate and do, okay? So there's no more questions. Jihong, thank you very much for asking those. Really appreciate it. There are no more questions that have come in. So I kind of want to use this time just to give you a case study of a client of mine and how he started off in China and how he's progressed. So this is a UK company. They are in the apparel sector. And how they started off in China is that they found a distributor. And very lucky for them, they found a foreign distributor. So a distributor based in China, the owner of that trading agent is a foreigner, is a Westerner. So, from a mentality perspective and a workflow perspective, very similar mentalities. And for a period of 2 to 3 years, this distributor did everything for the client, everything from marketing, branding, all the way to offline retail. So they even set up a retail shop and managed the retail space, all the way to e-commerce, where they worked with 3 e-commerce platforms to sell the products online as well. Now, lo and behold, this happens. The distributor decided to retire. And upon retirement, instead of selling his business, he just wanted to liquidate the company. And he informed my client, you have a choice, either find another distributor, I will very happily work to do the handover, or think about doing it alone, because you have to. They then looked at the trigger points, which was volume of business, value of business, trends, scenarios. They really did a thorough analysis, and my client decided, you know what, I'm going to go it alone. So this is where we came in. We basically came in to help them to set up their own entity. And the relationship with the distributor was so good that even my client has taken over staff that have worked solely for his business for the period of 2 to 3 years. They've opened up their own retail space under their own company. All the e-commerce contracts have been transferred over. So it's been a very smooth sailing for them in terms of going it alone, because they had a very good relationship with their distributor. The distributor basically helped them get started and build up their momentum. But it just shows you a little bit from a case study perspective, the phases that this client went into and what was the real trigger point for them, because they were happy to keep everything as is, was the fact that the distributor decided to retire. That was really the main trigger point for them to say, okay, either we find another distributor, start the whole relationship again, or we do it on our own. And they decided to go along and do it on their own. And they're doing both offline, say offline meaning retail, as well as online e-commerce. So it just shows, you know, phase one, they used a distributor. Phase two, they went off and did it on their own. That's the end of today's presentation. There are no more questions that have come through. I appreciate this because it is Chinese New Year and this is the last day of work. So I get to leave a little bit earlier than expected. Again, I just want to highlight, I'm around over Chinese New Year. I would love to be able to talk to you. Please do book a strategy session with me. I've added that into the chat section of the control panel. Definitely go ahead and make a meeting with me. Just to end it off today, I want to thank everyone for joining this workshop series. I have a feeling that the majority of people joined today have joined either all 4 sessions or have joined at least another session this week. Thank you so much for doing that. It's always wonderful to see people who've joined every day. I appreciate it. We have an upcoming series in February. The information is already uplined on our website in the events section. We're going to be talking about human resource compliance in China, looking at whether you can hire in China without having a legal presence, what options exist if you don't have a legal presence, what are critical labor and employment law questions for you to know. This is something that I highly value. I'm not going to give you the whole book on the PRC labor law, but things you just need to know. You need to always know about termination of employees and how that works, how to prevent fraud, and in relation to foreigners, you know, what's the visa requirements, what are individual income tax regulations, social insurance requirements, etc. So if you're interested in those topics, please join. You can register very easily on our website, woodburnglobal.com/events. I'm going to add that also into the chat section of the control panel. Here you go, and you can register now if you wish. I want to thank you all for coming. It's been a pleasure speaking to you in the last 4 days. I hope you were able to get something out of these sessions. Again, if you have questions, comments, set up a strategy session with me and I'd be happy to talk to you. And I hope to see you all again in February for our Human Resource Compliance in China workshop series. In the meantime, a very happy Chinese New Year. I hope everyone has wonderful new beginnings for the year of the rat. Thank you again and goodbye.